India versus the rest of the EM Asian basket?
Well, at JP Morgan Asset Management here in Asia, we have an overweight recommendation on India. And that is primarily driven by the fact that A, we can find attractive companies to invest in, and overall valuations are reasonably compelling. So, we have an overweight asset allocation to India.
India is back again on investors' radar with the Nifty nearing all-time highs. Do you see more steam, or is it time to take money off the table?
No, the fact that we have an overweight recommendation, I think, would suggest that we believe that there is much more to go. So while you say it's on the radar screen, I don't think it has actually been off the radar screen, and foreign investors have continued to invest. So it's close to an all-time high, as you suggested, but with the combination of earnings growth that we're expecting and reasonably attractive valuations, we think that there's more to go.
The main push has come from the FII inflows. Do you expect them to continue coming?
Well, it's very difficult to predict, flows, but especially in the short term. But I think when I sort of look around the world, look at our client base and speak to a number of retail and institutional investors, I can make one or two comments. One is that I think India will continue to see, in the medium to long term, a substantial increase in portfolio flows from foreign investors. There are very large pockets of the world, very large pockets of investors globally who are still underweight or underexposed to India. In some cases, not exposed at all. So there's a fair bit of that money that will shift in favor of India going forward. In the very short term, of course, it's very difficult to predict the nature and volatility of flows. But in the long run, we remain very convinced that foreign investors will continue to increase their exposure to the Indian market.
The RBI recently cut rates, though cautioned that there is no more room for more rate cuts. Does this put India financials in a sweet spot?
Well, I think the RBI's rate cut last week the comment that they made was there was limited room. You have to bear in mind that the RBI is also conscious of two other important variables: inflation, which has been very, very sticky over the last 18 to 24 months, but it's beginning to correct. And whether you look at CPI or components of the wholesale price index, inflation is heading in the right direction. And the other thing that the RBI looks at is the government's own fiscal balance. And I think that the finance minister has made concerted efforts in that direction as well. So I remain confident that this central bank will continue to moderately reduce rates. In terms of financials within the portfolio, this is our single largest exposure as a sector, continues to remain so. We believe that financials offer a number of attributes. It's also a way to play consumerism in India, and some of these companies represent among the best managed in the country, and so we remain quite confident. So we're bullish on the financial space.